step guide to investing in the stock market in 2025. This is not one of those videos that leave you more confused than before. This video might not be a tutorial, but it's a full walkthrough from downloading your very first app to actually buying stocks and managing them like a pro. By the end of this video, you will know how to choose the right investment app for your country, create and verify a brokerage account step by step, buy your first stock safely without wasting money, and build a portfolio that can actually grow your wealth over time. And I will reveal the mistakes beginners make that makes them lose money fast. If you avoid them, you will already be smarter than most new investors. Without wasting much of your time, let's get started. Now, before we dive in deep, listen carefully. After watching this video, you will still have questions. That's normal. So here's what I've done. I've created a free YouTube WhatsApp community where I will personally guide you if you get stuck. It's 100% free, but only for a limited time. Later, it won't be available for free again. So make sure you check the link in the description and join right now before you continue watching. That way, if you don't understand something, I'll be there to support you. Let's get back to business. So you can use the following investments app: Robinhood if you're in the US, eToro for global, Bamboo, Chaka, True for Nigeria and Africa. There are other investments apps, but for the sake of this video, these are the ones I can list for you right now. So go to your Play Store or App Store, search for Bamboo, Truth or eToro depending on your country. For the sake of this video, let's use Bamboo and Truth. Download and install the app, create an account with email or phone, use strong password and 2FA, cyber security tip. After creating your account, you need to log in with your phone number and password for Bamboo app, while Truth is email and password. I would advise you to test demo first to build confidence. Demo account is paper trading. Imagine you want to test drive a car before buying it. That's what demo account is. No risk, just patience, and that is that for creating accounts with email or phone number. The next stage is creating a brokerage account. The middleman that connects you to the stock market is a brokerage. It is at this point that you feel the KYC process, and I must be honest with you that this part can be so annoying that if you're not patient, you might want to give up. On this part, you will upload ID. It could be passport, driver's license, NIN, etc. The next thing is to take selfie. That's the face verification where the system will ask you to smile, blink, raise your head, and so on. The next thing is to link bank account or card. Your profile will look like this with green marks ticked if successfully completed. Funding account is if you want to fund your account you have created. You have 3 options to do that. It could be via direct bank transfer, debit card, or PayPal depending on your country. The next step is to learn and understand the interface. Every stock has ticker symbol. Example: AAPL is Apple, MSFT is Microsoft, Transco Holt is Transcorp Hotels PLC. You will see features like market order, limit order, and so on. What next? The next thing is understanding stock types. Let's use the US stocks as example. There are blue chip, growth stocks, ETFs, and dividend stocks. Blue chip stocks are stable big companies like Apple and Coca-Cola. Growth stocks are stocks like Tesla, startups, and tech companies. Dividend stocks are companies that pay you passive income, while ETFs is like a basket of stocks. It is safer for beginners. Do you know there's a way to own a piece of 500 companies at once with just one click? That's called an S&P 500 ETF. The next stage of what you need to know is researching stocks. Consider basics of fundamental analysis. That's when you check revenue, profit, debt. Also look at price to earnings ratio and read company news. Basics of technical analysis. You need to study support/resistance and simple moving averages. Example of what I'm trying to say: think of research like checking reviews before buying a phone. You don't just buy randomly, you compare, study, and decide. Another stage is buying your first stock. 4 steps is involved. The first step is to search stock name or ticker, then tap buy. The third step is to enter amounts or shares, and lastly, confirm order. The next stage is building a portfolio. Don't put all money in one stock. Use rule of 3. That means 1 blue chip, 1 growth stock, and 1 ETF. Use dollar cost averaging, which is investing small amounts consistently. Example is, instead of waiting for a perfect entry, invest small amount like $50 every month. Over time, this beats 90% of people who try to time the market. Another important aspect of this video I must talk about is